Hello class and welcome to our second lecture series on financial accounting or principles of accounting, and I'm your instructor Jamal Haider. So we were discussing about the chapter 1, and in which our last discussion we talked about that the business equation or accounting equation is assets is equal to liabilities plus owner's equity. We also did an illustration as well. So today we will talk about its fourth learning objective, that is evaluate business operations through the financial statements. So let's talk about that. Here we go. So the question is, how well did the company perform during the year? So we can find out through financial statements. So basically there are four financial statements. Number one is income statement. Number two, retained earnings statement. Number three, balance sheet. Number four, cash flow statement. So throughout this, lectures, this financial accounting lectures, we'll talk about every statement, or we'll talk about one or two statements together as well. Okay, so the order is like that: the income statement, then retained earnings statement, and remember, the statement is just how you present in some kind of format, but actually it's a formula, right? As we talk about that, the retained earning formula is opening retained earning plus net income minus dividend, right, is equal to your ending retained earning. Formula is the same, but how you present it in some kind of format, right? So we call that a statement. So don't worry about that. We'll talk about the different formats as well in our coming slides. So basically, let me just hold it here. Yes. So in accounting, there are four statements. Income statement, which tells you how well did the company perform. The keyword here is during the year. And how we're going to calculate, or how we are going to make income statement: revenue minus expenses or our net income, all expenses, right? If the answer is positive, it's income; if negative, it's loss, right? Statement of retained earnings, it tells you that how did the company's retained earnings changes during the year, or how much the company retained the earnings from previous or from this year as well. How we are going to show the statement? The formula is beginning retained earnings plus net income minus dividend. Answer is your ending. So if you want to find out this year retained earning, then you just need to remove this effect. So net income minus dividend would be this year retained earning, but all the retained earnings that company has retained from previous years, including this year, for that one you have to add the previous beginning years retained earnings. We'll talk about through examples as well. So just to understand how, or what these statements show, what are the purpose of these statements. Number third is the balance sheet. What is the company's financial position at year's end? Now here we go. The keyword is at year's end. It means the balance sheet shows a snapshot of business position at a particular date at the end of the year. For example, if the balance sheet is made on 31st December, it will show that the company position at 31st of December. And its formula is the accounting equation. Assets is equal to liabilities plus owner's equity, right? And then statement of cash flow. It shows how much cash did the company generate and spend during the year. Now, the question arises whether net income is different from cash flows. Answer is yes. Why? Because the income statement shows us what's going on during the year, whether we make a profit, whether we make a loss, right? The statement of cash flow shows where the actual cash flow go, right? For example, how much cash you invested in fixed assets, how much cash you receive or you pay to your financiers, those who provide you capital. Who are those? Those who provide you loan or those who provide you equity or invest with you as shareholders, right? You can gather money two ways. Either you loan from bank or public or from individual, or either you issue shares and receive money, right? And how much you invest or receive money from operations. So cash flow statement formula is operating cash flow plus investing cash flow plus financing cash flow. Or if a negative, then you can have a negative, right? If you pay more, then it's a negative sign. If you receive more, it's a positive sign, right? And also this is the order of how you make the assignments. These statements. First, you make income statement. So let me just clear here to give you the idea. So we'll repeat this in our coming slides as well, but just to give you an example here. So if you make this is orderly. First you make income statement, then you make statement of retained earning, then you make balance sheet, and then you make statement of cash flow. So from income statement you find out net income, and net income is going to be used in making of retained earnings, and this retained earnings is going to be added here. Remember our honest equity we talked about over there. It's paid in capital plus retained earning. The honest equity has two parts. One is your capital plus retained earning, right? So it's also logical as well. And when you make these three statements, then you can make cash flow statement, because cash flow statements going to be, it's going to be used, using income statement and balance sheet. How we make that, we'll talk about. We have a separate chapter on that. Okay. So any question?
Yeah, I don't get how statement of cash flows is different from a statement of retained earnings. Can you explain that again?
Okay, very good question. Let me just erase all here. So the question is how statement of cash flow is different from retained earnings, right? So as the name implies, retained earnings, where it is cash flow, which include both inflow and outflow. So look at these words, retained earnings. So it means how much you earned during the year, how much you did not distribute to the owners, right? Retained earnings shows how much you didn't distribute to the owners. It means how much you keep the earnings within the business, not distributed to the owners. While statement of cash flow, it shows how much, where cash, not the online, not the barter system, not the non-cash expenses. We will talk about what are the non-cash expenses. For example, depreciation. I hope you heard about this word. So it's a non-cash expense. Whereas in income statement as well, we record some non-cash expense as well. We talk about in our coming lectures when we talk about how to make income statement and how to make retained earnings, balance sheet, and cash flow statement. But the difference between these two statements is that it only shows cash transactions, only cash transaction. If there is other non-cash transaction, it won't include. Statement of retained earnings shows how much earnings you didn't distribute to the owners, you retain in the business. While the cash flow statement shows where cash is going and where cash is coming and where cash is going, which means it shows how much you receive the money inflow and how much you pay the money outflow, actual cash, right? Not a barter transaction, not a non-cash transaction, right? Understand?
Yes.
Okay, so let's talk about in detail what we talked about in our previous slide. So how we are going to make the financial statements? First, we will make income statement. From income statement, we find out net income. And that net income is going to use to make retained earnings, right? I hope you know the formula for retained earnings. What is that? Opening retained earning plus net income minus dividend. Answer is ending retained earning. That ending retained earning would go to complete the balance sheet. And what is the balance sheet equation? Assets is equal to liabilities plus owners equity. And cash flow statement use both. It uses both income statement and balance sheet as well, right? So this is the order. First you make income statement, then retained earning, then balance sheet, and at the end you make cash flow statement.